The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tommy O'Brien with Tom O'Brien. We got quite a market to start things off. Dow Jones currently negative by 161 points, trading 23,871. S&P's negative by 19 points, trading at 2616. And the Nasdaq negative by 68 points, trading at 6936. Good morning, Tom. Feels like we kind of left off right where the market finished off yesterday at the closing bell.
I'm telling you, it's pretty intense. You know, it's amazing that the bottom line is that these companies are coming out, they're making money, and they're selling them off.
It's across the board, right? I mean,
it's a heads up. There's no doubt about it, man. Pretty amazing.
Speaking of earnings, right? Let's jump on over to our man, Kevin Hinks. Of course, every day, folks, 11 a.m., Kevin, his whole team, the TD Ameritrade Network, they're out here talking defined risk, options trading, and, man, they have a plethora of stocks to choose in this market. You got Boeing this morning, Twitter rocking. Both of those, I think, are almost negative after spiking higher. Pretty remarkable. Kevin Hinks, good morning.
Morning, Kevin.
Morning, Tom. Good morning, Tommy. Welcome to Bizarro earnings season, because this is the strangest earnings season I've ever seen.
It's you know what's interesting, Kevin, is that the banks, picture this, you know, at the beginning, the banks kicked it off. The banks had monster numbers, right? The market doesn't care. It's like, okay, really? Yeah, well, that's what happened. But some of these other numbers, you know, like we had just been talking on the TD network, and they had these defense contractors. I mean, it started yesterday, but they just took them apart. Well, they took the industrials apart, not just the defense contractors. There's some heavy selling here, and guess what? They're making money. So, bottom line, one evidently has nothing to do with the other right now.
And Tom, not only are they making money, but in terms of stocks like Boeing raised their guidance, right?
Yes.
Lockheed Martin raised guidance. Sales and earnings both beat. Honeywell topped earnings and raised their outlook for the year, and all these stocks are soft. Even though, and by the way, Northrop Grumman, they guided below estimates, destroying Northrop Grumman. General Dynamics, they were a little shy on their revenue number, you know, destroying General Dynamics. So you're looking at some big moves here. It's like any weakness, any sign that you're not firing on all cylinders, and they are punishing your stock.
You know, this is where, you know, we talk about, you know, your program, we talk about defined risk, but let's just, if we just take, you know, Northrop and we take General Dynamics, what we're talking about, folks, Northrop is less $40 and 2 days. Well, you can't even say 2 days. We're 7 hours.
I was going to say
6.5 hours yesterday, a half hour this morning.
Literally 24 hours, right? I mean, that's amazing, just from the open of yesterday. Yeah.
You know, we're right back to January 25th. So, you know, there's a heads up here, and that's where, you know, bottom line, defined strategies can help you out. Doesn't mean you're going to not basically go south also, but the bottom line is that money management, defined strategies, it's a huge deal.
You know, I was just looking at Twitter this morning, Kevin, and, you know, that's a completely different story in terms of, you know, when you're talking about defense contractors, but still so remarkable, and they've been battling hard to kind of come back. They have 16 cents a share versus 12 cents projected, 655 million versus 608 projected, and then monthly active users, which is probably the most important thing.
Good numbers there, Tom.
Across the board, it spikes up to almost $35, and it's almost $7 off that level. It's down 5% today with all of those numbers.
So it's so funny, Tommy. I've got Twitter up on my screen right now watching it, because I'm like, look at the action in this name. Even though it's pretty significantly here off its low of the day, over $1 off its low of the day here, so it's starting to bounce back a little bit. But you're right, it was up this morning solid and came all the way back down to trade 28.14 today, Tommy.
Yeah.
And now it's over 29 again.
Pretty remarkable, man. Man, oh man.
but
What
no
if they
one
had
is
missed,
safe.
right? That's always the story. What if they had missed? You know, it's
Right,
like down
exactly.
6% with a beat across the board on every metric you can imagine. Totally.
It's earnings season, guys, and they're coming at us fast and furious.
Yeah. So what are we going to be looking at today in swim lessons, Kevin?
You know, all week we have a theme today. We're covering Greek and then a strategy to go along with that Greek. So today we're going to cover iron condors and theta. So decay and how it works in an iron condor.
Nice. You know, as you were going over those calendars, I believe it was yesterday, right?
Yes.
That was really cool because, like, when you look at a market like this, it might take a while, you know, to basically get back the bread that you may have lost. But that is quite a strategy when you just keep rolling those babies forward, particularly because we have so many different option expirations now, right?
Yeah, it's, you know, the calendar spread is it doesn't get a lot of love in the options trading world because it's a little more, you know, it takes a little more work to make it work because you got to roll if you've done a wide one, right?
Yes.
So, but and it's a low volatility strategy. So when it's low volatility, people don't always like to even trade. They stay away from it. But so yeah, I'm really let's put it this way: a calendar spread in terms of low volatility is what I used primarily in my trading career.
You first traded, well, not your first trade in with GE, right? Yeah.
That's right. First ever trade in GE I legged into a calendar spread. Exactly.
I love that, man. When I heard that yesterday, I says, "Look at that. That's, you know, that's cool. That's quite, and that would make sense too with GE, right? I mean, yeah. The bottom line is just it's a continual grind, right?
Exactly right, and I would put these on, Tom, in low volatility in size. I would trade a lot of them and just wait. It allows you the positive theta allows you to be patient, right? And it allows you to trade gamma or trade vega on the downside. Yeah.
It's interesting how you guys are dividing up. Well, I mean, that's how the option market works, I guess. But I really didn't quite understand that you could actually trade the different Greeks specifically inside the option in general. Do you know what I mean? Which I got out of that yesterday, which was pretty cool, man.
Yeah, this is a really good week of options education here that's really driving a lot of fundamentals home, but also giving you strategies that you can use every day.
Yeah, and you certainly got the movement in the marketplace. Oh, my God.
Yeah, I mean, if you don't like these stocks, just wait a minute. They're changing every single minute. This market is ripping right now.
It is ripping. Listen, folks, every trading day right here, 11 to 12 Eastern Standard Time. If you haven't test-driven yet the Thinkorswim platform, come over to our website at TFNN. You can see the banner on the top of the side. It's an outstanding platform, folks. Hit the button. Bring up the platform. They'll let you trade with paper money. You can listen to Kevin and his team every trading day. Get those strategies down pat. Take one strategy at a time, and then you off to the races in a big way. No two ways about it. Hey, it looks like the market just doesn't want to basically change the Sherwin-Williams paint. We got a little painted all red out here, man.
You know what? Up days, down days, Tom. We keep trading them.
Totally. Have a great one, Kevin. Have a safe one. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 138. You get the Nasdaq off 59. S&Ps are off 17. Let's go inside the Dow Industrials first, Tom, see what's moving them. We know that good old Boeing basically is always moving them around. But we got a couple of big numbers in here out here today.
Yeah.
You got on the downside, Goldman putting 30 negative points. 3M another 20. That got smoked yesterday. Microsoft, look at this. Microsoft negative 15, that's down 225. Boeing is putting positive 24 points in after numbers, but it can't hold.
It was a lot higher, yeah.
Big time, man. Inside the NDX 100, let's see what we got. Oops, 1 second. Yeah, look at this. Yeah, so you got Amazon down 41 bucks. You get Netflix down 12. Wynn's down 10. Wynn came out with numbers last night. Nvidia down 950. Tesla's down 475. Big numbers right across all these numbers, these indices rather. Now let's go over to gold. So gold out here. Gold's traded down to 1320. You're at 1322. You got a small swing from April 6th at 1322.60. Your large swing is out here at 1312. Let's see what we got here. Yeah, we'll see if this baby holds. You know, it's intriguing. The gold equities are holding. You still get the GDX is only down 23 cents.
Okay.
Hey, bonds. Let's go over to the bond market, right? That's,
Sure. Rising above 3%.
Yes. And the 10-year got down to 118.31 today. You're at 119.04. Now, the number to keep your eye on even today is that 119.14, because what has happened is that note and bond market did come off this low this morning and had big volume. We had volume at that bar at 950, just right before we got on.
Okay.
So we'll see if we can get anything going. And as you just said, 3.013, we got it right now.
Yeah.
So, and it's Wednesday, right?
It is Wednesday. That is correct. So Wednesday is 10:30 a.m. Eastern Time. We take a look at those crude setups ahead of the EIA inventory report for crude. Crude's had some volatility as well with these markets recently, climbing, almost trying to make it up to that $70 price level. Pretty remarkable. So it's 10:21 right now. Those numbers get released every Wednesday, 10:30 a.m. Eastern Time. Let's jump over to the Nadex platform, check out this oil market. So I have the chart up here. We're looking at the June futures contract. We're currently trading 67.84. And let's jump into the crude oil spreads here. So we like to take a look at the volatility trade, purchasing, buying a bullish spread, selling a bearish spread, and then having profitability in either direction, hoping for a dramatic move when we get those numbers about 8 minutes from right now. So I started things off, Tom. We're trading 67.83. I took a look at the ones that expire at 11 a.m., which would be the shortest time frame. And those don't really line up too well with the price point right next to where we're trading. You'd either have to choose 67.50, so you'd be about 30 cents away to the downside, or 68.25, so it's kind of right in the middle. So I jumped right to the noons, and that's where they line up pretty well. I say pretty well as this moves. We're almost to the penny. So you'd have a 67.75 spread that goes up $1.50 to 69.25, and then you'd have a 67.75 spread going down $1.50 to 66.25. So I have those two spreads up here already. Here would be your bullish spread, $1.50 up from where we're trading at right now. Pretty much, we're within a penny or two from 67.75. So you'd be buying this spread, and that's going to cost you about $26. Now, most of this, I say most, all of it is just premium, right?
Yes.
Because we're kind of below by a penny where this spread begins. And then, similarly, you would be selling the bearish spread, and that's going to be a little bit more money only because you have about a penny and a half of intrinsic value in the bearish spread currently. So you're looking at, you add those two together, you're looking at about $54, call it, of cost for both spreads. So you would need 54 cents of movement away from 67.75 to begin your break even. And those expire at noon, right? So you'd have about an hour and a half after we get the inventory numbers at 10:30. Looking for just more than about 50 cents of movement from where we're trading at right now before you begin to break even. Now, just out of curiosity, let's jump into the 230s. I haven't even checked them yet, see where they line up. So a little bit different. 67.50 would be our point that we could use here. And what happens there is that you're going to have almost 30 cents of intrinsic value to the bullish side, right?
Okay.
So that's going to kind of take on a bullish bias there.
What was that number again, Tom?
For the 230s?
Yes.
67.50.
Thank you. Okay.
So that's where, you know, we're trading right now at 67.80. So just to put it up and go through it real quick, here would be your bullish spread. Now it's $3 instead of $1.50, but it's going to cost you $50 just for this one contract because 30 cents of that is actual value, let alone the premium that you're going to have to pay for that basically spread. And then on the downside, you'd have no value and just premium. So that's going to cost you $68 as opposed to about $54, $56. But what changes here is that it has a bullish bias because you have this 32-cent head start to the upside. So if you were to break even to the downside, you would need 68 cents of movement below 67.50 to the downside before you started to break even. So you can see that it changes kind of the dynamic of that trade when you're so far in the money on one side. That's why if you just want to trade pure volatility, it's nice when they line up right next to where the floor and the ceiling begin, which for these noon trades, 67.75 is where your bullish spread begins, up to 69.25, and then 67.75 is where your bearish spread begins, down to 66.25. And as these tick around, now you're going to have value on the bullish side, so that's going to turn into your expensive one, and there's your bearish one. Same price, but they're kind of, wherever that value is, that's where it's kind of swinging left and right. So again, be about 54.
And you know what's so cool? Like, just from the trading of today in the futures market, we've had movement of 67 cents from the highs to the lows. You know, the high today is 67.99, the low is 67.32.
Okay.
So,
nice. Nice. And I mean, look at the action that we had, right? Just call it, I mean, Monday and Tuesday,
right.
let alone the past recent weeks of the action we've had. So we'll see. We've had some surprising numbers in recent weeks as we've seen surprises in the actual inventory number that's come out. And it's always nice when you're trading volatility when you get an actual surprise in the underlying fundamentals, which is really what you hope for, of course. But sometimes we've seen it where they come right in line and the market still reacts pretty violently one way or the other. So we'll see where that sets up. It's kind of nice to compare the options you have in terms of whether you want to look at the 11s, the noons, the 230s, what kind of price action you have, and that all depends on what your market bias is. Do you want to pay that extra premium? Do you want to pay for maybe you have a little bit of a bullish bias and you'd actually prefer that 230 trade, right? Where you have exposure to the downside, but it's kind of a bullish bias where you can kind of break even much easier with an upward movement when you already have that 30-cent head start. You know, just to put it, this would be your bullish spread. So we went over it, it'd be about $68 for both contracts. So your break even from 67.50 would be 68.14 on that 230. But again, the one that I kind of liked, if you're looking for straight volatility, was that noon trade.
That noon.
$54 for both sides. And we'll see. We'll come right back. It's 10:27 right now. We get those numbers in 3 minutes. Come on back, folks. We'll see where that oil market shakes out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. So I see those numbers, Tom. You got them up. We got a surprise in the market a little bit. We have crude oil inventories rising 2.17 million barrels. And as I was looking for those numbers, I saw that Bloomberg users were feeling a teensy bit bullish this week with an estimated 114,000 barrel overall crude stockpile draw. So,
wow.
So 114,000 barrel draw, call it almost even, right? That's only 100,000 barrels. But man, 2.17 million barrels rise. And as we see that, let's jump over because, man, that market, I had it up, and let's see, it was. So it spiked within the span of about 15 seconds, not even 15 seconds. As the news broke, it traded from 67.80 right down to 67.40. So 40 cents in the span of 3 seconds, and
wow.
It's kind of hanging out at that level now. Now, to recap, we were looking at the noon trade potentially.
Yep.
67.75. Man, look at that market as we speak. 67.75 would have been our pivot point where we had profit. We had exposure in either direction from that point. We had value in either direction. And so pulling up, this would be our bearish spread, which would have most of the value at this stage. And right now, you're looking at about $41 of potential value as this is trading at 67.36. And as it keeps ticking, we're at about $40 because your 40 is 67.75 down to this 67.34, which is the active offer that you could buy it at. And, yeah, you know, our trade was going to cost us $54, so we're not quite at break even yet. But keeping in mind, we're now 2 minutes past the news, and these are noon expiration spreads. So you have your choices here. You know, if you're bearish, you could let this run. If maybe you think that's not too surprising and the market could turn around, you could always close out this spread like we speak of. You take off some value of that spread, whether it's $30 to $40, cutting your only investment basically down to $10 or $20, right? And then the bullish spread remains active. If you rise above 67.75 before noon, you start getting value to the positive side. But it's good to see when you make a volatility spread trade that the market moves 40 cents in 3 seconds following those numbers.
And you know, it's amazing. You can see, like, on the Bloomberg right now,
we got it up,
we get all those numbers. Look at that. The Bloomberg were just, you know, their analysts were down a little, but look at the medium estimate was minus 2.2 million drawdown, and we got a plus 2.1.
It always is intriguing. So they have the Bloomberg user survey, that's market-wise too. You know, you have a lot of big investors. Absolutely. That's a big terminal. Right. But median analyst estimate, man, that's pretty remarkable, was expecting a 2.2 million barrel decline. It comes in at 2.2 million barrels, but guess what? Of a rise, not a decline. So a miss of about 4.4 million barrels, and that is the reason for that big 40-cent spike right to the downside. And, you know, surprises in gas that we're seeing as well. Gas inventories rising 840,000 barrels as well. Surprise. I see surprise all over, the word surprise all over that feed.
Seriously, man. Yeah. Seriously.
So
I'm glad we got, you know, lots of gasoline, because the bottom line is that we're driving season starting, 30 days.
I filled up my gas tank this morning, man. I couldn't help look at that price and say, man, oil, what's going on? Why is it near $70? We need a little reprieve, and maybe this will get it. So checking back right now, 67.48 currently. We're about 4 minutes past the news. We'll check back in on the hour, see where we go. Okay.
So look at that. You know, for a gain, they're not really hurting that oil market. That's interesting, all right? I mean, that's, you know.
I mean, that's as we see it, it takes a while to digest everything in this news. You know, the first move is always very quick off of the top line number, which is, you know, the decline of 2.2. I'm sorry, the rise of 2.2 versus the decline estimated. But man, they have demand in here. They have, you know, so many numbers that's why the noon sometimes works out exposure to the noon spread, because we see that the price action can take 15 minutes. And as we speak, now we're at 67.33. We're almost at the low, and maybe that's where the market's digesting, making sure before they sell it off that there's nothing in there to hint at, you know, a possible rise in demand that might take care of that surplus, because we're almost at the lows that we've made as we're at 67.33 as we speak.
Gotta love it.
Pretty cool. Totally.
Pretty amazing.
Yeah.
Let's go look at some of the higher volume stocks in this market today. Actually, here, let's go to Facebook, because Facebook, you know, we were just talking about volatility trades, right? And what you're going to have, folks, after the close out here today, Facebook, guess what? This thing has got hammered. This is coming out at 4:05 this afternoon, and this will affect the NDX 100.
Definitely, right.
We'll see. Bottom line is that have they lost clients?
It'll be interesting to see everything they talk about, right? I mean, earnings are a PR spin for sure. Now, they have to report their legitimate numbers, but there's always an effort to convey to investors those numbers in the best light possible while making sure you're not setting unrealistic expectations for the next quarter, which will only come back to haunt you. But still, it's going to be interesting to see what they talk about, what they choose to highlight potentially in their own words beyond kind of the top line number. I'm assuming, we've talked about many times, people really aren't pulling advertising, right? And like I spoke about one of my good friends, he got married this weekend. He's in advertising, so he had a lot of friends that are in advertising, of course, co-workers just in the business. And he had talked about that advertisers love Facebook for the ability to be quick and nimble as well, where you can buy something today, stop the campaign at 3 o'clock, restart it at 8 in the morning, and that ability to have constant control with the ability to reach who you want is something that is going to be hard for them to get away from. So nobody's pulling the money yet. So I assume they're going to be okay. But yeah, it's going to be, well, we know people are spending, but just like you said, are people leaving? Is user growth stalling? That whole debate. And as you see, I see you have it up there right now.
Yeah. So they're projected to report average daily active users of 1.45 billion. Can you imagine 1.45 billion daily daily users?
Pretty remarkable.
That's unbelievable, man.
And that's where we talk about that. How are they going to keep growing when they almost have everybody in the world using their platform on a daily basis, right? Pretty remarkable it is. I mean, pretty remarkable.
Well, this is pretty wild. Monthly active users probably rose to 2.19 billion, analysts are predicting.
So there's only 7.6 billion people in the whole world.
Oh my God!
So wait, you got 2 out of every 7 people in the world jumping on your platform, and I wonder how many of those people don't even have access to the internet. So then it's they really have reached almost full saturation, and so I'm looking at. By 2055, they expect the numbers are going to be about 10 billion people in the world. So it's like, man, even by 2055, there's only going to be 10 billion people in the world. Well, they're already at 2 billion a month. Where are they going to grow to, man?
Yeah. So look at this number under here. So Facebook suffered its first ever decline in North America users and said that time spent on the social network declined 5% in the December quarter. So that was the first time that ever happened.
Interesting, yeah.
Is that is that before? When did this come out? Was that before the?
I'm pretty sure that's before. I mean, 3 months is a long time in terms of this has kind of just come to light, and it really probably has been a full 2 to 3 months. But I feel like it probably came out right after.
After that,
yeah.
No, I know.
Yeah.
Stay right there, folks. Tommy and I come right back. We have the Dow down 16, Nasdaq's down 15, S&Ps are off 7.5. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. So, Tom, I want to check back in on that oil market if we can. We're getting a little bit of a slide to the downside. So it's currently 1042, and we're at 67.16 now, getting a little bit of another leg down.
We're in the money.
We are in the money. That's right. So if you had made that trade, again, we're looking at about 54 cents. And right now, we're give or take. We were, and that's how quick this market's moving. But right now, you could buy back your bearish spread, the one going from 67.75 down to 66.25. For about $50 you'd receive there, and that would cover all but about $4 of your trade for both sides of it. But we'll see. I mean, the day is young, and that these are noon expiration spreads. It's only 10:43 right now. Market's jumping around. And again, that's where you have a lot of options to trade these prior to expiration, depending on what you feel like is going to happen in that market. But good price action to the downside so far in the few minutes following those news, and we'll see where it shakes out. Pretty cool.
Big time. So let's go over to Microsoft. It was, you know, like Microsoft. So Microsoft's coming out with numbers tomorrow.
Yeah, they're struggling today. What's going on, right?
Yeah. Man, they hit this thing hard.
Yeah.
So, you know, yesterday you go from 96 to 92 with volume. You know, it has that high volume low, man. that high volume low in all these equities, folks, is a disaster on February 9th. And they're selling it, man. You know, you got, what, we get 10 million shares already. We did 34 million yesterday. That's saying it can do, you know, bottom line, another 30 million shares. It's like, you know, these are some very large sellers in the market in general right now.
Yeah, I was surprised to see, because I saw Microsoft down, and I said to myself, oh, I wonder where Apple is if Microsoft, you know, just thinking tech stocks across the board. I hadn't seen Apple, and no, Apple's doing well for itself today, which is interesting in terms of the two of them. You know, Apple up almost a full %, up $1.38, and you have Microsoft getting smacked for sure.
Yeah. So let's go over to Goldman for a second. So the magic number of Goldman, folks, you know, at the end of this month is up here at the $251 and $250.70, and that was the highs of 2007. Now, if we close underneath that, this is going to be a major failure, and this thing has been up here for let's see, about 16 months. 16 months it's been over that high, tremendously lighter volume, and what you have thus far is that we're actually coming back inside that high with volume expanding. That's going to be a major heads up for the banks in general. It's just going to, it's so wild, man.
Yeah.
It's so deviant, man. It really is. It's
For sure, right? Like,
and I'm sorry, go ahead.
I was just going to say, like we were talking about with Kevin Hinks, I mean, they just beat across the board. Can't imagine what would have happened if they had ever disappointed, let alone, I mean, all of them.
Totally.
Just having dramatically almost record-breaking quarters.
Yep.
And
no doubt.
Yeah, and it seems like it was all priced into the upside, and yeah.
And the defense contractors. So
yeah,
check
that
this
Northrop,
out.
right? I was pulling it up when Kevin and you were talking about it. Pretty remarkable.
Yeah, now, look at this. This had a low of 318 this morning.
Yeah.
It just gained back $17.
Yeah.
That being said, volumes were still way too high. Yesterday we did 1.8 million. You're already at 944,000. We almost made it to the. We made it to 318. 313 is that high volume swing low from the 6th. General Dynamics, they come out with numbers. They all come out with numbers. GD, let me see. General Dynamics, that little baby got down to 207.
Okay.
Look at that, it's 220 to 207.
I know,
man.
the last 2 days for those stocks, for sure, right?
Intense. And then Boeing, we go take a look at Boeing. Boeing is up $11. This is, let me pull this intraday.
And Boeing, just so as you pull it up, I mean, they're up, but then, man, they really crush it. They earned $364 a share, and the estimate was $258.
You want to hear something sick? This is, everyone in the world would love a business like this. Let me get this number in front of me. I had this number here this morning. You're not going to believe this number. Okay, so with Boeing, folks, right? You have, okay, they do $97 billion a year in revenue, right?
Okay.
They have orders. They have backlog orders. It's not like it's in inventory.
Yes.
They have orders that people have put in
Yes.
of $486 billion. So 5 times their revenue. 5 times
you
their
know,
Can
the
you
only-
imagine having a business like that?
The only reason that I believe it, and it doesn't shock me, is because when that number first came out, that they said that Boeing was going to potentially do over $1 trillion in business just with China over the next 20 years. And that's what I said, man, and that's just China, and they're a huge
Yes.
customer, I'm sure.
Right.
But that's just China, and that's just 20 years, and they already have potentially $1 trillion in exposure. But yeah, in this quarter, they came in $23.38 billion, Tom, versus $22.26. So they had over $1 billion extra revenue, and that, I'm sure, factored, in 90 days, and over $1 extra earnings per share. And yeah, they're up, but again, that is like quite a beat. You almost can't imagine beating, when you're talking about numbers that large, an extra $1 billion in revenue over the course of the quarter. And they're I don't want to call it barely up, but they're not even up to where the stock opened at yesterday, to put things in context. So, yeah.
Right. Yeah, no doubt.
So we got a caller. We got our man Carlos from Texas. Carlos, good morning,
Carlos,
man.
what's going on?
Hey, how you doing, guys?
We're doing great, man.
How you
Talk to
been?
you guys. I'm doing all right. Thank you. Thank you for asking me.
Good to hear from you, man.
That's a beautiful thing, man.
It's always nice to hear the father and the son talking about the economy and stocks and indices. It's a pleasure to hear you guys.
Well, we love hearing you, too.
It's always a pleasure to see you pop up on that call log and call into the program, man. Totally.
I love you guys. And the reason I called today, it's something that really your dad confused me. I keep listening in different news channels and newspapers. I read about it. Yields and related to metals, and especially gold. And everybody keeps saying that this yield, that it's over 3%, will hurt so much gold. But I would like to hear from the expert, the real expert, what's your take on it? And at what point this will really hurt the gold market, if you please.
No, well, this is what does happen. Fundamentally, if yields go up, the metals should get hit. That being said, what the formula actually is, though, is that you take the inflation rate, what the true rate of inflation would be, what the yield rate is, and then that gives you a true yield. So that's what everyone is really questioning out here. That say, okay, if we're at a 10-year, 3-year, 3% yield. Hey, just stay with us a second, okay? We'll be right back.
I will. Thank you.
We got Carlos, Tom, and Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow down 18, Nasdaq's off 5, S&Ps are off 6. We're all coming right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. So it's 10:54. I just want to check back in on this oil trade one more time because, man, oh, man, we got some volatility to the upside. We're looking at 5-minute bars here, and we just went from 67.30 all the way up to 67.80, and we're currently sitting at 67.76. So quite a reversal like we talk about. If you had the foresight to close out the bearish spread, that would be a nice trade because now you'd have the exposure to the upside with over an hour left. But pretty remarkable price action in oil, and we'll see where that leads us until the noon expiration, but pretty cool setup. Just want to check back in on it one more time, Tom, before the hour ended.
You gotta love it.
Gotta love it.
So, Carlos, the yield structure versus the metals is that what is the real interest rate, you know? So like the Fed fund future rate right now, that baby, you know, if they go up in September, it'll be like running at 2%. If the inflation is truly running at 2 to 2.5%, well, guess what? You're still at a zero rate structure. That's the formula inside of the metals market because of the fact that metals do not pay interest. You know, but we've been in such a low interest environment. You know, you can make the argument, I can make the argument that, hey, guess what? A low interest rate environment, the bottom line is that, you know, gold's been laying between, what, 1,100 and 1,300 for 6 years now. You know, but that's their argument on the other side, that if rates go tremendously higher, gold and metals should get hit, you know. And if the differential is too much, I would say that, yeah, that would happen. I'm sorry, go ahead.
Can I ask one more question related to this? Oh, it's done.
No, go ahead, go ahead.
Oh, it's the nugget and the gold, the daily chart, and at the February February the 12th, I think.
Oh, I'm sorry, man.
Give us a call tomorrow, Carlos, man. Call us back. We'd love to hear from you, all right?
Have a great one,
you,
folks.
man.
Have a safe one. Thanks, Tommy.
Thanks, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.